All right, greetings everybody. This is Jeff Scott. This is my top-down review. It's for 12/22, I guess, by the time I get done. And it's almost that time now. It's 12/21. It's 11:07. Let's get started. Crazy week. Finally, my cold is getting better. Maybe as my cold is getting better, the market's going to get sicker. I titled today, Are We At or Close to a Top? I'll show you the evidence and give you my thoughts. This is for educational purposes only. I'm a doctor, not a broker. Most physicians lose money with their investments. I'm independent. No one pays me anything if you buy something. No one pays me anything to say good things about their products. And trading involves risk. You and you alone are solely responsible for any decisions you make. I always like to call out my influences. I started with CanSlim, improved by Morales and Catcher. Ian Woodward really added steroids and put it into technology with George Roberts of Hgsi. My buddy George Lee, great trader from Western Canada. I won't hold that against him. Van Tharp, the king of position size and money management. Cigar, now at Superior Profits, got some great indicators that I use in TradeStation and Metastock. And my buddy John Person, and I'll call out something that he showed me when I was at his trading office on Friday. John's an author, developer of some great tools, good friend of mine, and I highly recommend his stuff. And in fact, soon we'll be selling an add-on for Hgsi that will be some of his work. Very exciting. What I need on my desert isle, besides high-speed internet, I need TradeStation and Thinkorswim. I use Hgsi for analytics. EdgeRater supports that, and then some of my Superior Profit tools. There's a lot of things on my desktop. Most of them I rarely use, but I use to support once in a while my other thoughts. Websites for Hgsi is here. Again, don't be confused by my email address. I'm independent. I don't get any money from Hgsi for talking about the product. I just love the product. Here's the website. Free 30-day trial. You click under investing strategies. You can see hundreds of videos by myself and Ron Brown. Stock patterns are cyclical. I always want to know where we are. And boy, once again, does it feel like, to me, like we're getting ready to roll over. Yes, I know Friday was a strong day. Yes, I know indices were up about 0.5%. But I also know they were up a whole lot more before the market rolled over around 1 o'clock. I'm nervous. And then we're going into a crazy holiday week. More to talk about that later. Because of this, I took profits. Actually, at this time of year, I always take profits and buy myself a present. I have a trading account in TOS. I have one at Charles Schwab. I don't know what it is about Charles Schwab. In 2018, I made a killing on Tandem and that account. And this year it was Hgsi. Hgsi bought me my toy that I mentioned last week. I'll show you a picture when we get near the end. So, since I think it's here, I've raised some cash, took some smaller positions, sold some premium, and closed some of my more aggressive positions where if the market goes against me, I would lose. And I did some roll ups and outs on my option plays, so I got closer to a strike price to the current price and took profits off the table. Yes, Friday did look okay. This is a sea of green. It's hard to see a lot of weakness here. I guess we could say financial showed a little bit of weakness, which was surprising as rates went up. The economic numbers in the U.S. and worldwide actually were positive. So we go into the major markets. I always like to just flip into my TOS and look at the dailies. Make sure I'm on dailies. Every once in a while I screw that one up. And, the point here is the little white balloon is on Friday. That means we close the year. We close Friday at the high on this screen. The screen goes back a year, so that meant we closed at the highest in the last year. And boy, have we come in a long ways from the post-Christmas Santa Claus rally, which turned into quite the bull market and perhaps is starting to get a little bit overdone. So if I look at the E-minis, it's in a buy signal. Not much to say except wow. If I look at the NASDAQ futures, we'll say wow again. high of the year here in a buy signal. If we look at the Dow futures, let's get the same amount of time on that. Wow, high of the year on Friday, same type of a pattern. The Russell futures, well, this is probably the best that they've looked. I don't think they've taken out, we'll look on Hgsi, well, we can do it right now, switch this to weekly. I don't believe they've taken out their prior highs, but I think you're going to see not only are they high of the year, but we're getting closer. Here's the prior highs at 173.39, and we are here a little bit to go, 7 points on the IWM. So unlike the other indexes, which are at their all-time highs, not quite so much on the Russell. But boy, the Russell's really had a big move this year, hasn't it? The VIX, we'll talk more about the VIX later, but notice that the VIX this week actually moved up some. Make sure I'm in the right chart here. This is the VIX futures. The low of the year was on the 17th, and it actually moved up a little bit as even though the markets were strong. Notice on Friday, closed at the high of the day. I will revisit the VIX in a few minutes. And the dollar actually had a strong day and rallied as well on strong economic data. So hard not to look at those indexes and be kind of bullish, at least as Friday ended. On the weekly charts, not a whole lot to say. Just gives you, just shows you the same thing on the top three: the E-minis, the Nasdaq futures, the Dow futures, all-time highs. Russell, here's where we have to get to. VIX sideways, and dollar, it's been sideways as well. Now, underneath, rates really spiked up this week on strong economic news. As long as rates stay below these lines here, we're at a point where they don't seem to harm the market. In fact, the closer they get there, I think, the stronger the economy is, the market is. When rates get very low, like they've done in 2009 and other times when the markets have had some challenges, it signifies some pretty bad economic times. Now, not only do the rates move up, it's hard to see here, but the yield curve widened. So that's great news, showing less evidence or concern of an imminent recession. AD lines on both the small stocks and the large stocks, all-time highs. And notice how the small stocks are starting to catch up, where the large stocks have done much better over the last year. If we look at the NYSE, again, the only thing that trended down on the AD line, on the ETFs, was the bonds. No shocker, especially as we saw interest rates move up. But you can see the AD line at all-time highs. Now, if you want to be bullish, I've heard the comment multiple times that markets don't usually sell off when they have such great breadth, that you'll start to see divergences here. And that's probably true. If you go back here, back in 2018, you could see the AD line cracked as the market was peaking. Our AD line has not cracked, so that would be a notch for the bulls. Now, if you look at breadth, stocks above 200 is getting higher than it's been for a while. Stocks at the 40, again, up to the upper part of the range. Why is that important? Because when that turns over, that's usually when the market is starting a correction. When I look at the 12-week or 3-month new high, new low, we're back at a point where corrections or sideways motions can occur. We spiked up this week from where we were last week in yellow. We still have some pretty significant divergences on the S&P 500 with the McClellan oscillator and summation index not making a new high despite price on both the daily and the weekly. Now, I've spent a lot of time of late talking about my oscillator, the high-low jump, and I look at it in different markets. I don't usually look at indexes, but I thought it was remarkable to see here that we're as extended as we've been on the S&P 500. We had a red candle high on Friday. This is a setup here for an island reversal where we open up below and trade lower for the day. Hope that's not what happens on Monday, But gosh, when you start to see red candle highs, when the market's extended, you start to see sell-offs. So I think we have to be a little bit nervous here. It might just be a very small pullback and then on to new highs, but we could be having something worse before it gets better. Buckets, 75% of the stocks in the S&P 1500 are above the midline of their Bollinger Bands. That's bullish, and you can see they're clumping here at the top of their bands with about 13% of the stocks above their Bollinger Bands. Again, not a signal yet, but certainly looks like it's getting overheated. There is no evidence of an active Hindenburg omen signal. That's great. They usually occur when the markets start to get start hitting new highs, so that's something we'll be watching for. Market tone clearly has turned to much more bullish. One can see a lot of green here on the Woody indicator on the various indexes, and if one looks at sectors, most of the sectors have switched to green as well. So a lot to like here for the bulls. The canaries in the coal mine, I called it a melt up. Why? Because, gee, we just almost went vertical, especially with Tesla having all-time highs, Apple all-time highs, Netflix starting to move, Google doing quite well, Facebook doing quite well despite all the news flow. The canaries are hot and could be a sign of overheating. Now, good news about next week. If you don't like news, is there's not much news, as you could see. They're still going to give us some jobless claims on Thursday, rather. Some durable goods, a few things, but not much in the news, and certainly almost nothing on earnings this week. Market thoughts, they closed higher on Friday with the major indices rising 0.3 to 0.5%, although well off the high of the day with a midday reversal, which I'll show you and talk about. Market's still up huge on the year. This, I don't remember the last time I saw numbers like this. And if we just go sideways and end like this, what an incredible year. I mean, I think you can be performing above the NASDAQ, but boy, this is quite the mark. And we know that most money managers underperform, especially if they have a long short portfolio, because this is a market that's been tough to short for the year. Be careful next week, typically a slow week, low volumes as many take a holiday. Maybe we'll see some action on Monday. Tuesday, I think we close early. And then I think the market will probably get very quiet through the New Year's. There's lots to suggest we're at or near a market top. Divergences, Daly McClellan. Well, markets are extended for the year on TradeStation, high jump, and I'll show you some evidence for that. I do not know when these markets will roll over and die, yet I started buying some insurance, some VIX, and I'll show you why. Took some profits off on Friday, bought myself a present. We may get through the next week into the new year intact, but markets can stay overbought for a while, but eventually this one's going to correct. Did you see the VIX reversal? This is the benefit of having friends like John Person. I'm sitting in one room doing some trading, looking at closing out some options, taking some profits, trying to raise some cash to pay for my new purchase. And he calls me and he goes, Jeff, something's going on. This is how smart, and this is why it's nice to have smart friends. He says, look, the VIX is fallen, but look at the histogram, look at my volume, his volume indicator. When I say his, something's going on if you have such divergences here, or he would say convergence, that positive divergence or convergence, that something is going on. And then these 1, 2, 3, 4 bars, 1, 2, 3, 4 bars, it turns out it came right down to support, which is this line here, and the VIX just rocked the rest of the day. Now, what did I do? I bought VXX the minute he showed me that, and I took a fairly big position into the weekend. Hopefully I'm wrong and the market keeps going and I'll just take a loss on the VIX. I buy options. I've got, I think I bought them for 40 cents. They're at 80 cents now. So I don't have much to lose, although I have a lot of them. But, I think this market is dangerous. Now, I like to joke and say and talk, and I know people sometimes get mad when I talk about some of the great trades. Most of these I've shown you, but I think the message here is it's the same trade over and over and over again. Yeah, I wish I was smart enough to have found Hgsi down here at $3.50. I wasn't that smart. But after Hgsi had a viable gap up, it started to make my my radar. It had 600. Excuse me. The day I bought it, it had 685,000 shares. My filters usually set at 500. Why did I take this trade? I took this trade because it showed up with a mobile breakout from a squeeze and a kahuna within the day or two prior. I also had my chandelier exit, which or could be a resistance overhead, and I put a buy stop above that. Since it was a cheap stock, I actually bought stock instead of bought options. So I bought 5,000 shares on March 11th at $9.80 a share. Now, if you are with me long enough, if you watch my videos, I don't charge anything unless you come to one of my live meetings, and I'll teach you how I find these things. This is my trade. Squeeze, sideways movement, catch up to moving averages, and breakout. Well, what happened with Hgsi? I pointed out to you, not necessarily on the best day, back in here on a weekend review when it was 25, and it promptly sold off a few bucks because it had a bad earnings. On these biotech stocks, it's all about data and data releases, and it's hype and news, not earnings. It came right back down to support, and well, it had some good news come in, and I was able, a stock that I bought for $9.80, I took off around at $100 a share. I took off 4,000 shares, and I bought myself a Rolls Royce. I like toys. People know in past years I bought boats. I believe that I should pay myself a salary when I have a good year in the market, and that was my salary this year. Tonight's agenda, I'll go through some charts, talk a little bit about the market, try and make my case of why I took some profits out of the market, not just to buy a toy, but why I took some to protect some of my winnings from this year. Now, I do like to look at TradeStation, and let me show you one of my concerns in the market. It's going to be the same for everything. People who've been here before know I look at 6 things. I start with, am I in a buy or sell? That's a buy. John Person PPS indicator. That's a sell. Buy, buy, buy. Daily, weekly, monthly. Awesome. Do I have green? Those are bullish bars, or an elder impulse indicator I can buy or hold. Do I have blue, which is neutral, or do I have red, which tells me I shouldn't be going long, I should be going short or holding? They're green all across, very bullish. These little red dots tell me that I probably have MACD divergence, and if you figure that, if you look here, and I know I do this every week, but for those that have been here before, bear with me because I always have new people joining. Clearly, we've got higher highs in the market. I don't think there's any question about that, except I don't know how to use my tools sometimes. But if I go back here and pull trend line down again, where am I? If I look at my MACD, that's pretty obvious. These red dots tell me I don't have to do the line. So we got MACD divergence on daily and weekly. They can go on for a while, but eventually it leads to a pullback. All right, so that's concerning. We're up at the upper part of the Elder Auto envelope. Now again, I can ride that up. We've been riding it up, but eventually we're going to pull back to the center or down to the bottom. That's also concerning. Look at where we are in the weekly as well. The weekly bond goes green. Of course it is. This is a super strong market. Get your BDIs down to this here. Look where it says for that high jump. We are at 100%. That means we are the most extended we've been for the last 200 bars. The reason we've not been more extended in the last 200 bars is because when we get there, the market pulls back. This is a dangerous zone. We're going to have to do something about that. You know, we got to 94 here. 94, 95 is typically the max we get to. Up here we got to 94 before the market rolled over. It doesn't have to roll over Monday or Tuesday. It's not going to stay at 100% for long. I think this market's dangerous. If I look at the Dow futures, forget everything else, it's all the same. 94.64. If I look at the NASDAQ futures, 100. If I look at the Russell futures, 99.82. If I look at the mid-cap futures, 100. How often have I seen 100 on this over the last several years? Never. We are extended. That's a dangerous number. That's why I took profits and bought some VIX. Doesn't have to happen on Monday. If I go into Hgsi and I go into major market analysis, major markets plus, I hit this, and let's shrink this up here to, these are a number of the major market ETFs put together for us by Ron Brown, and he keeps them updated. Thank you, Ron. He has some great webinars and web series. I pay for it, and I think you should too. Support the people that support you. Top-down view. So I'm ranking things by 1 day, a little bit of 5 days, and a little bit of 3 weeks. When I see NASDAQ, mid-caps, NYSE, small caps, biotech on top, I know I'm making money. When I see gold miners, bonds, oil, volatility, gas, commodities on the bottom, I know I'm making money because that's not usually where I'm trading. So clearly growth was in vogue, and we'll try to remember to look at the Innovator 50. Sold off hard on, well, it's 3% off the 52 weeks high. Forget the sell off hard. It was up 1.4% on the week. Let's start with the S&P 500. Somebody asked me for my indicator video. I forgot to send it. I'll send it to you tonight or tomorrow. We'll go over all my indicators. It's a good thing. If you've not seen it before, just email me at hgsidoc@gmail.com, and I will try and remember to get it out to you. All right, so I'm going to look at a daily chart on the left, a weekly chart on the right, and let's make that bigger, and I'll go to the weekly. Perfect. So, what can you say that I haven't said already? To me, that's an exhaustion gap. I'm concerned that that is it. We gapped up. We actually closed lower than we opened, gave a red candle high. I think that this market's risky, and I am concerned. This is the S&P 500. I wish I could say we're going to the moon without pausing. Here is the Dow Jones Industrial, also gapped up here, traded down the rest of the day. Here is the NASDAQ. Gapped up, actually closed higher than it opened. And then the Russell 2000 using IWM also gapped up. So, yeah, I mean, what a beautiful day to be long. I just don't know what tomorrow will bring. I just think we are clearly getting to a point where this market's oversold and at risk of correcting. If we look at the dollar, good economic news should be good for the dollar. And if I remember correctly, the dollar had a pretty good day. You could see breaking up to a chandelier stop here above the moving averages. Look at the weekly bullish engulfing pattern on the weekly. That's strong dollar action. Volatility, we talked about how it's been low. The futures look more impressive than the cash, but notice the hammer forming here. We'll see if that's meaningful on both the daily and the weekly. The VIX, the volatility has been low. Maybe I'm jumping the gun on my concerns. I just don't like to lose money. Gold, is gold ready for a breakout? I'd like to see it clear a chandelier before I get crazy, but I think so. I think gold will be one of the winners if rates start to rise. And how about silver? It's been lagging gold and still lagging a little bit, but very similar. So gold and silver might be interesting places to be. We looked at gold and silver. What about gold miners? They were weak. Where gold looks a little bit stronger now than gold miners. But I think that these might be places that shine as volatility comes into the market. I also want to look at a couple of other things. Biotech. What a run this had. It's starting to slow down. Hgsi and Alcos were two giant winners for me. There have been a lot of buyouts. There have been a lot of positive news after the American Society of Hematology, some of the other meetings. Amarin, disappointed, really hasn't done anything despite getting positive news from the FDA. You can see how strong biotech is. Told one of my neighbors back in September, go buy LABU. And I felt bad because it dropped a little bit. Turns out she got in at 37, so she's pretty happy. 37 up to 60. And then I want to look at the 50 ETF. This is IBD 50 stocks. That's actively managed. New ones come in, old ones go out. And it's about to break out to a new high if this bull run keeps going. So I know I sound like Debbie Downer, and maybe I feel guilty for it. I just think this market's getting extended. Now, this doesn't have to be a 2007 or 8 crash. It can be sideways for a couple weeks. It could be a 3% or 4% correction. Do I think we're going to have a 10 or 20% correction here? No. Those AD lines are so strong, I don't believe that's what's going to happen. But would I be protecting my portfolio, taking some profits off, and maybe raising cash so when it gets cheaper? Absolutely. Absolutely. I mean, you don't see anything except for my totals. You don't even see that. Well, I would tell you I've got more cash raised now than I have had in a long time. I just think we're going to get an opportunity in the next 2 or 3 weeks to buy things a whole lot cheaper. We'll see. Doesn't hurt. I mean, I may miss some of the gains, although I still have a lot of long positions. Just have less longs and less at risk than I was at the beginning of this past week. I look at the 2-day force up, and let me do this the right way. It must be a filter. Let's see what we got going here. Do that. Do that. There we go. Let's see. 2-day force. And you're going to do this to me today, aren't you? Let me just check. All right. When this happens, I go up to the reference groups. Pause this and sort this out. All right, well, God only knows why that was acting up, but it turns out all I need to do is an update. So I did a quick update. As you could see, 2-day force up, we have 67 winners. 2-day force down, these would be stocks with a short-term downturn. We have only 10, so that's very bullish. If I look at a 5-day down, things have been down for a longer period of time, I've got 17. And a 5-day up, I've got 71. It should tell you about how strong this market has been. So I like to concentrate on a couple of the groups up with a lot of momentum. So let's take a look at some. Look at specialty pharma. I do this every night on my own. So we'll double click on the first one. There's my buddy, Hgsi. That's the weekly. Let's go to a daily. And let's open up the weekly chart. Now this is up on data. I think it's on a depression medicine. Actually had upgrades to the 130s, 140s, and above. So I left 1,000 shares on, but I took off 4,000. I'm a pig, but sometimes I'm not. I've learned the hard way that, and I've talked about it before, when you get these big volume, big moves, a lot of time you're going to pull back, and you'll see that if I show you next Cura today. So would I be buying this today? I still have some, so I guess that means yes, but I think it's risky. This is no longer about earnings. This now is about one thing. It's about their data. I think a telltale sign was on the day that I took some profits here, they announced after hours that they were going to do a secondary, and the stock traded up on news on the secondary. In my mind, that's a pretty strong stock. So Hgsi, I'm still long, tough to get in right now. You got to double click to get the right order here. Okay. Zoetis, I think this is a veterinary medicine company. I don't remember. You see, I don't know this company at all. Veterinary vaccines and medicines. Sideways move, looks like it's breaking out here. Everything turned green above. I would have rather bought it down here, kind of a cup handle breakout. Has some earnings below its earnings per share growth. Not that exciting to me. Probably too late. It is crossing the magic line there, so I probably put it on my buy list. Catalyst Bio, I'd try to figure out why this had this move. It's probably, with the doji forming here, probably done, but I would watch that. Precision Bio, this is what I was afraid of with Hgsi, that it would move right up, come back down, and I learned on some of these before it's better to take profits, so I took some of my profits, much of my profits. Bridge Bio, this looks super strong, don't know anything about it. You can see what biotech's been doing. This is specialty pharma, but it behaves a lot like biotechs. Here's a couple others. 47, is that a high tight flag? So it should get between 42 and 16 is 26. Should get a 15-point move from here. So maybe that's something. Look at the demand that 47 is under. Often these stocks will ultimately reverse. Look at Beijing, had one of these patterns. You got to take profits because it fell right back down to their 50. So specialty pharma and biotech remain super strong. Here's the biotech index. Look at a couple of these. Gilead, beautiful pattern here. Squeeze, Kahuna, my buy signal. Hint, hint, the name will be changing next week. In a squeeze, that looks excellent. The problem with Gilead is they've just gone nowhere. It's a sideways stock. It's hard for me to buy a sideways stock. I like growth. The next one is called Hgsi. Don't know anything about it. This is the kind of one you wish you were holding. I'm not sure I'd want to be buying. It's had a gigantic move. Clearly had to be on news. Seattle Genetics. I'm interested in this one. You can see the industry group is super strong. They had an approval on Thursday night going into Friday, which is a big deal for a company that had one drug on the market. Now they have two, and they have a third coming. So I like this one a lot. It's pretty extended, though. That's the concern, although it did come down from this peak. I know a lot of people, including my buddy George Lee, made money on Karuna. Again, think Hgsi, came down hard. It's starting to run again. Mobile breakup from a squeeze, 2 kahunas in a row. I think you could start looking at playing Karuna Therapeutics, not without risk. Biogen, I don't know if it's going anywhere. Here's the next cure I mentioned. Another one of these patterns with a big run up, fall, and then it starts to move again. You could probably be looking at this as well. So still a lot of exciting stuff in biotech, and the big daddy in biotech is probably Amgen. And here's where we buy them. Mobile breakup from a squeeze and 2 kahunas at the 50 at free parking. That's where I buy them. I didn't buy this one. Kicked myself in the ass because I didn't. That looks beautiful. I know that my buddy John Person's been making money on that one. Next one down is Internet Media. I mentioned Facebook's been doing well despite the news. Well, it kind of looks like it's at its all-time high or all-time closing high. Facebook, power move, part of why the Canaries are doing so well. This one looked interesting to me. Here's your uptrend on the weekly, pretty deep pullback. Broke out this week, Bible gap up, mobile breakup from a squeeze at Kahuna, taking out the magic line. This one looks interesting. IAC Corp, not on its earnings per se. I like the chart pattern. I also like Teleria. Don't know anything about it. It's under demand. has earnings, although not very much. Sideways stock in a squeeze. Bible gap up, squeeze, mobile breakout, 2 kahunas in a row. This looks interesting, probably could go higher. Then we get to the index. Typically, I'll go down to the index. Application software. Work-a-day, it looks like it someday is going to be done going down. Maybe it is done going down. I think there's better things to buy. Why is it on this list at the top? Because it has 3.8 million shares a day and it was up 5.59 on Friday. Something to watch. Hard for me to buy BlackBerry, but I kind of like 4 out of the last 10 days with Kahuna as a move up. Problem is I'd be worried about the target being so close to the 200-day moving average. Salesforce, what a great company. Kind of choppy. I'm looking for tight things. This is tight, but you want to get it down here. How would you have found it down there? You would have seen a belt hold at free parking with a mobile breakout from a squeeze, a green candle low, and a kahuna, and a cross of the OBV over its moving average. All the things that we look for, you just can't buy every stock in the market. Why do I scan for these things? Because these seem to be the things that signify before a stock or a market is about to move up. Cerner, I talked about a couple weeks ago. It broke out, went sideways. Looks like it's got some more opportunity here. Mobile breakout from a squeeze and a kahuna. So a lot of things in this market are looking interesting. REITs, not all REITs, but how about some REITs with some nice dividends? Here's one, American Tower. A couple of the tower companies came up to the top, and also some of the medical REITs came to the top. Uptrend, pullback, mobile breakouts from a squeeze, multiple kahunas, and a breakout. I've liked and continue to like American Tower. Same business, Crown Castle International, same pattern, breaking out. Welltower, medical office buildings, senior housing. Too far down in its pattern for me, but it does have a 4.3% dividend and good earnings. But what else is here? Health Peak. Here's one of the ones I've been in and out of. Medical Property Trust, 4.9% dividend. So these are good dividend plays, especially if this market pulls back. Omega Health Investors, 2 kahunas, a mobile breakout from a squeeze. I don't expect the same response as I get from a growth stock, but if this market does get ugly, these could be places to hide, especially with a nice dividend return of 6.2%. Not a fan of department stores, food and drug stores. I've been in CVS, and CVS has been great. Look at Rite Aid. I'm thinking Rite Aid. These are the stores that didn't get sold to Walgreens or somebody else who did an acquisition. And all of a sudden, they woke up. They have a new CEO. They had a good earnings report that came out, I believe. Let's see. Let's look from quick info from the web. FinViz. Third quarter beat. Surpasses estimates, stock up. So something's going on with Rite Aid. It's a cheap stock, had a huge move. Maybe that is too much of a move, but boy, does it have a long ways to run if it's a turnaround. Broke through the magic line. So I'm interested in Rite Aid. Walgreens, I played for a short period of time, didn't get anything. It popped on talk of a takeout. But the one that I'm still in, CVS, which has had just a beautiful run, and heck, might even be setting up again here with this pullback. CVS has been a good stock for me this year. Back up. Internet-based services. I can't buy this. But, is it done going down? You got higher lows, higher highs, broke above the moving averages from a squeeze. Uber. I don't know. Will it ever make money? Lyft, more of a pure play on rides. Clearly under some demand. A kahuna came in. also above the moving average. The beauty of something like this, and I'm not saying to go out and buy it, is you can put your stop right underneath the price and not give it a whole lot of breathing room. Match.com, I think I must have talked about it last week when it broke above the 50. I know somebody bought it and they actually sent me a thank you note. Mobile breakout from a squeeze and a kahuna at free parking. And boy, did it have a nice breakout. I think this goes a lot higher. It's on my buy list again this week as well. Booking near its highs. Is there anything else that I want to look at here? Tell you the one, not necessarily in this group, but one that I've made a lot of money on in December is Shopify. And I think we talked about it a couple of times. It's getting tired, so I have to look at taking my positions off perhaps early in the week unless the market gets another move higher. Large pharma, I play Merck. I've been in Merck for a while, and Merck is the leader in immuno-oncology with a drug named Keytruda, and it looks to me like I should be thinking about taking profits in Merck. Buy a big gap up, Doji, after a big run up. Is that an exhaustion gap? Time will tell. Pharma, biotech all have some risk based upon Washington and price controls. Shooting Star and Eli Lilly after really a melt up there. J&J. These stocks have had a big run. I'm not sure if I want to be chasing them right now. Maybe I want to be taking profits. Look at e-commerce discretionary because it's got a couple of other good stocks in it. Netflix, well, I told you to be careful. I told you I wasn't sure I was going to take the trade. I ended up taking the trade. I'm not sure I'm going to hold it until earnings, but what I ended up buying in Netflix was just 20 contracts, and I bought a simple 330, 370 spread. I paid $14, $13 for it. It's up a little bit right now. It's up $14,000 on this trade, and I'll decide what to do with it. So it's very profitable. And why did I take that trade? Because of the seasonality. It goes straight up here. This is a seasonality program I got within Netflix. I also took it because it had a new PPS buy signal. Modified Laguerre broke above there at the same time. A lot of things here said to buy it. I'm not sure I'm going to hold it all the way to earnings, to be honest. I'm still concerned about the cannibalization and the churn that Netflix is going to have because of Disney, but I can't argue with success, and so I'll stay with it for at least a little while longer. I am also long Alibaba, and one could see that Alibaba, after doing nothing for quite some time, has had a nice move up, and I'll continue to ride that with a trailing stop. I am not in JD.com, too many in the same place, but this one's breaking out here as well. Chinese stocks doing well after the China truce or China deal, whatever it is. Mercado Libre, the South American eBay. Here's my setup. Mobile breakout from a squeeze, a kahuna, a little bit above the 50, sitting on top of the 17 and the 8. That looks interesting there as well. Did I see something with Revolve? Yeah. Here's a bottom fish. An IPO, it sold off since it came out. It does make some money. Has a kahuna mobile breakout from a squeeze sitting on the 50. I'd be careful with this, but if this thing ever goes higher, this is as good a place as any to start. It's got higher lows and higher highs. Just something to watch. So I've gone through the top 10 industry groups. I've shown you some things that I liked. I did have a few things that I found on a buy watch, actually quite a few things. Now, all this means is they made it because of some of my scans. And as I've said before, I don't necessarily buy them all. I may not buy any of them. Last week I bought a couple off the buy watch list. But I put them into a trading model and I looked for signals. So I will be looking for buy and sell signals on these stocks as the week goes. I'll be watching their charts, mostly end of day, listening to the news from time to time, and I will take trades as dictated by the market. Many of the ones we've talked about are here. Let's start by looking at industry groups. I've got a bunch of biotechs. Epizyme I actually bought on Thursday. Immunogen looks like it's about to run. Let's take a look at that. It's already breaking out. Cheap stock. Here's when it was time to buy. Global breakout from a squeeze, a couple of kahunas. Something's going on with this stock. The volume, average volume, making sure that it's enough, is 2 million. So I'm interested in Immunogen, so I'm looking at that one. You can take a picture here. I showed you Seattle Genetics and Nextcura. A bunch of those REITs, the American Tower, Corporate Office Properties, Kite Realty, Omega Health. A couple of the hotel REITs like RLJ Lodging looked interesting here. Why? It pays a 7.3% dividend. It's breaking above its moving averages. I like the dividend if this market gets tough. On specialty pharma, Axosome, Catalyst, 47, Neurocrine, TG Therapeutics, we've been talking about the last couple of weeks, and Zoetis. Why would I have AT&T here if I think the market's going to struggle? It's been going sideways. It pays a 5.2% dividend. I buy it when the market sells off. Another one I liked pattern was SBA Communications. You've seen this pattern time and time again, a big run up, a sell off. It had a move up on Friday, cleared its moving averages, a bunch of kahunas, a mobile breakout from a squeeze, pays a small dividend. Perspective was another one sitting on free parking, mobile breakout from a squeeze, and kahuna. How do I find these? I find these through scans. I also find them on the weekend because I look at close to 1,000 charts. I'm all about pattern recognition, and this is the pattern I look for day in and day out. So I'm not going to pick anything for you to buy because I'm not so sure that this market's going to behave. I'm hoping that the worst thing that happens is we get a sideways move. Not to say we don't have a blow-off top into this week. We could go up 3% this week. That would probably be dangerous, but it's going to happen. Be careful. Recognize that markets don't go up forever. Have stops. Raise cash because you're going to get. I'm certain you're going to get a chance to buy things cheaper in the new year. Thanks, everybody. I do not plan on something next week because I'm not going to be that excited by the market, but I'm going to talk to George, and with the release of the add-on sometime around the beginning of January, let's do a live session. More to follow. Please like me on YouTube and subscribe on YouTube just in case you don't get my newsletter or George's newsletter notifying you that my videos are up. To all my friends and to the occasional internet troll that gets mad at me because I grunt and snort and wheeze, happy holidays, happy Hanukkah, Merry Christmas, Happy New Year's. We'll talk to you next year. Goodbye, everybody.